And what most people don't understand is that there is a very clear rule on what approaches and what processes you need to implement according to the deal sizes which you are closing.
And once again, a very warm welcome from the HubSpot Startup team to our webinar today, where we talk about how to build the right go-to-market foundation to scale better and faster. Today, I'm not alone. Today, I'm with a true expert when it comes to the topic. Joel will introduce himself in a second, a bit more detail. The good thing is Joel is a true startup veteran. He did what he's telling you today already in practice. In real life, he got his hands dirty, so you can trust what he's saying. So very much looking forward to your session, Joel, and learn from you. For my part, I'm Fabian. I'm the head of HubSpot Startup in the DACH region. And in my role, I basically support startups around my regions to get better in their marketing, sales, go-to-market, fundraising. These are the topics where I support my startups. But I'm not the true expert in all the fields. That's why I always try at least once a month to get external speakers into the HubSpot Startup vault to take the stage to dive deeper in a certain topic where they are the true experts. This is exactly the case with Joel when it comes to go-to-market. What we will cover in the session here, just a quick run through before I give the mic over to Joel. We will talk about common pitfalls during the go-to-market stage, so you don't need to don't make these mistakes. Joel will also show you how you can use practical frameworks to basically overcome those. And as I mentioned, Joel made his hand dirty at the startup already, so he can also talk about his own experience, but also on some experiences that he did in the last 4 years working with all these great startups and scale-ups. So he will be able to give you also some real-life examples on how to apply those frameworks to be successful in your startup journey. And as mentioned, we will have a Q&A at the end, so please have your questions in the Q&A section of the Zoom so we can cover them at the end of the session. And that's enough from the intro. Now, I would say, I hand it over to you, Mike. I hand over the mic to you, Joel, and let's kick it off.
Great. Thank you very much for the introduction, Fabian. It's an honor and a pleasure to be here and present today a little bit more about the topic of go-to-market and how to do that successfully, and basically share a little bit of the many mistakes that already have done in the past to help you actually avoid making the same mistakes. Now, before I jump right in, just a little bit of background about myself so that you all also know to whom you're actually listening. I myself, I am originally Swiss. I grew up in Zurich. I have built up 2 IT businesses in the past. I worked in Silicon Valley on the venture capital side. I had the pleasure to screen about 50 startups per week over there. So that was quite a busy time. And 2016, I joined a young company in Switzerland called Beekeeper, a B2B SaaS, where we scaled from 3 to 25 million in ARR in a very short amount of time. And that was also very the basis on which then I started diving deeper into supporting companies in scaling. Basically, while going through that journey, we of course had our investors and our advisors that were supporting us, but what was always missing was someone that did just not give us high-level advice on our business, but really understand our market, our company, and then also accompany us through the process, meaning implementing the solution also with us together while going through the journey and not just high-level advising. And this is exactly what we then realized with Peakora 4 years ago. We describe ourselves as a revenue growth partner for startups and IT SMBs, and we focus mainly on the aspect of enablement, meaning bringing in the knowledge, but then also implementing together with the client. And as you see on this slide, over the past 4 years, we supported more than 120 different businesses, be it in the B2B hardware, software, or IT service area, or also on the B2C, D2C, or marketplace side. So what I'm going to show you today and explain, these are really foundations that can be applied for pretty much every business. Of course, then the detailed execution differs if you're like a B2B or a B2C business, but the underlying frameworks are the same. So I think everyone that is here today should be able to take something with them. Now, before we dive into the topic of go-to-market, I always love to talk about this. And what you see here are the 3 different main stages of growth every single company has to go through. And we primarily differentiate between the product market fit, the go-to-market, and the scaling stage. And as a company, it is absolutely important to understand in what stage you are actually in, because every stage comes with a different milestone to achieve, and hence also with different frameworks, processes, and tactics to apply to reach that milestone. And the most common mistake number 1 is companies being in the product market fit stage, already trying to win a lot of new customers and making money, instead of focusing on the product market fit, right? Focusing on measuring and proving product market fit before they invest into growth. And if that happens, that's like trying to fill a water bottle which has holes inside. Everything you put at the top will flow out again at the bottom, and it's not sustainable. But today we're not talking about product market fit. We're talking about the go-to-market stage. So that's for all the businesses that have an offering, that have a product, that have a service, that have a certain degree of product market fit, and now really want to start growing the business. And when we work with businesses that are entering the go-to-market stage or that are already in the go-to-market stage, there are 6 most common mistakes that we see happening over and over, which I'm going to outline in detail over the next couple slides. But to just give you a high-level overview of those 6 mistakes, these are the following. The first point I just mentioned, not measuring product market fit, right? They tend to feel that product market fit is just a gut feeling. It's when the market pulls, but that there are no mechanics or frameworks to really identify if you have product market fit or not. And yes, it's true, there is no magical formula that tells you exactly if you have product market fit or not, but there are different frameworks that you can apply, qualitative and quantitative frameworks that actually tell you and help you to identify your product market fit. So it's of utmost importance that a company is able to measure and understand their product market fit before they go into the growth mode. Now, the second most common mistake is not focusing on a specific market. And that's also very natural because when we are in the product market fit stage, we are, of course, very opportunistic, right? We're very happy about every single company that is approaching us or users that come towards us that are interested in our offering. So we also tend to talk with a lot of people and try out a lot of different things to make them happy. However, once I go into the go-to-market stage, it's very important that we stop doing this, that we stop being opportunistic. Because if I go into the growth stage and I still try to be everything for everyone, I most often end up not being anything for no one. And if this happens, it's very, very difficult to build a profitable business, to scale a business, because just even focusing on having a solid value proposition and messaging, which is the third point, which you see here, having a bad message market fit, is absolutely impossible if I try to be everything for everyone, right? So already there, we see the reason why the business might fail. Point number 4 is building the wrong go-to-market approach from the beginning. That means companies come from the product market fit stage. They do a lot of things manually, which is totally okay. Eventually, it's also unprofitable, which is also totally okay. But whenever I go into the go-to-market stage, meaning I want to grow the business, and it's important to take a step back and really understand what is the correct go-to-market approach for my business, for the deal sizes I have, so that I make sure I also build up a go-to-market motion, which entails the entire marketing department, the entire sales department, and so on, which is profitable and which can be scaled and also still create solid conversions. And if this is missing or if this is incorrect, then naturally also the sales process, the sales pipeline is wrong, very often not having proper CRM processes, which also hinders you from scaling. And the last point is missing leadership. So it's easy to manage a small team. However, when you then start hiring and you scale the business, there are usually 2 cases which we see. Case number 1, the control freaks, they start doing micromanagement. They're hiring more people and they do micromanagement, which then often ends up in burnout or at least getting crazy. And the second mistake is the opposite, letting completely go and trusting people without having a framework in place to actually control and steer, where then basically they lose the control over the business and things become inefficient. So let's dive into the different topics and show you actually how you can overcome those challenges in a practical way. Now, with the next couple slides, I will make references to real life examples. And one company I'm going to feature here is called Wingtra. It's a B2B SaaS and hardware company. They're producing so-called vertical takeoff and landing drones, mainly used to survey and map large areas of construction sites or mining companies. This was a client of ours already in 2021. At this stage, they were in Series A and already having more than 100 people. And I picked this example on purpose because the go-to-market foundations that I'm going to explain here in this presentation is something that should usually be built up already in the seed stage, latest in the Series A stage. But sometimes it even happens that more advanced companies are not having those go-to-market foundations in place. And then what happens is that you might get to a certain level, but then your growth actually stagnates, right? So it's very important for young, but also for more advanced companies to have that in place. So let's dive into the first most important milestone when you enter the go-to-market stage. It's to establish a so-called beachhead strategy. Now, the beachhead strategy is a framework that evolved out of the Second World War. And it basically describes the fact that if I take limited resources, in that case, be it soldiers, and I dispatch them over a wide region and area, then the impact those soldiers are going to have is very, very limited because they're spread very, very thin. However, if I take all those soldiers and resources and I concentrate them at a specific beachhead, then there they can have a very solid impact and have actually conquer also this beachhead because the forces are very, very concentrated on a particular point. And in business, it's exactly the same, right? As a startup or as every company, you always have limited resources in marketing and sales. And if you try to win a huge market over many different regions and many different industries, then it is super hard to actually create an important impact. So also there, it's important to really understand what your most attractive customer segment is, then also create messaging that is specific towards this segment, and then rally your limited marketing and sales resources behind winning this beachhead. And that will lead to various different benefits, such as a way higher efficiency and impact within that particular market. You're going to profit from the so-called flywheel effect, meaning companies of the similar industry and region will talk to each other. If you're well known to, for example, perform really well in the construction industry, then the construction companies are talking to each other about you. They will refer you. You're going to have a competitive advantage because you focus on a particular niche, and you're also going to have faster learning and adaptation for that particular market. And once this market is conquered and you have a strong foothold in this market, then you expand to wave number 2, meaning you repeat the same playbook and you start deploying it for the next industry. So this is the so-called beachhead strategy. Let's take a look on how to actually set this up. So the first step into this direction is, as I mentioned before, measure product market fit, right? So we need to get an understanding for where are we standing overall with our product market fit, but also what do we need to improve so that we can increase our product market fit. And there's a very common and easy qualitative framework that you can apply, which is called the so-called product market fit survey of Sean Ellis. And this is a survey that has been conducted tens of thousands of times from various different companies, always in the same way. And what you do is you approach your users and you ask them, how disappointed would you be if you could no longer use your product tomorrow? And they can either answer, I would be very disappointed, I'd be somewhat disappointed, or I would not be disappointed at all. And you have some follow-up questions about the benefits and the value they actually get from your product, and of course also what needs to be improved. Now, the clue here is that if you find out that around 40% of your users tell you they would be very disappointed, that's a very strong indication for product market fit. So it's not binary, but you're actually getting a score that tells you where you are standing with your product market fit. And that also tells you when you're actually ready to start investing into growth. However, it's not just the overall score that is very important. As you see it here, of course, you then conduct the survey like over time, every 3 months or every 6 months, to try to improve the score. But even more important than just the score is to learn how do you actually need to deal with the feedback. Because being human beings, we are emotional. So we always tend to listen to the extreme cases, meaning when I collect customer feedback, there's going to be very extreme positive feedback and very extreme negative feedback. But this framework tells us exactly how we need to treat the feedback. And what they say is the users that are absolutely not happy with our product, meaning they don't care at all if they can no longer use it, this is very negative feedback, and we tend to listen to them because we're humans. But the framework tells us don't listen at all. Why? Well, because those users are so far away from realizing any meaningful value from your offering, there is no value in trying to win them over. They're just not the right people to target. The other extreme would be our power users, all the people that say, I would be very disappointed if I can no longer use your product tomorrow. So these are the users that are very happy, they have very detailed feedback, but this framework also tells us it's also wrong to listen to them. Why? Well, because they are already happy. They are already power users. If we make happy users happier, it does not change our product market fit. So the segment we should really listen to are the people that are somewhat disappointed, meaning they get some value out of it, but they're no power users yet. But if we listen to them and we make our offering and product better for these kind of people, then we might manage to shift them from somewhat disappointed users to very disappointed users, and that increases our product market fit score. That means more people getting a lot of value from us. That means also we can extract more value in terms of money from our user base. And the second very interesting aspect is I can, of course, also segment Maupire users. So all the people that said they would be very disappointed, I can segment what kind of industries, what kind of regions, what kind of characteristics, what kind of age, gender, and so on. And that gives me very important information for my sales, marketing, and targeting of who I should actually go after. Now at Wingtro, we did the same case. And when we did that for the first time, we realized that they have an overall product market fit score of 74%. So this is outstandingly good. But we also learned that one particular industry, which in their case was mining and metals, had a way higher product market fit score than all the other industries. And that was a score of 92%. And this information is, of course, very, very important for us because it helps us to also make decisions to define our so-called ideal customer profile, meaning the one market they should focus at mostly. Now, in a real-life scenario, and the same it also looked at Wingtro, was the following. At this point, Wingtro was focusing on 3 different continents and over 10 different industries. And their marketing team were 2 people. How the hell should that be possible that 2 people should just be able, not even create any leads, but just be able to create all the marketing and the sales collateral needed for 3 languages and 10 different industries? It just does not work, right? It's not possible to create any meaningful impact. So with this learnings, then we took a look at their markets and we did a so-called market validation, which you see here in this chart here on the right-hand side. So you basically divide the different markets they have available and you start analyzing the business about urgency, market size, pricing potential, customer acquisition cost, and so on and so forth. And of course, we also used all the insights we won from the product market fit survey to understand where is their strongest product market fit. Ultimately, we created a chart like you see here. We listed all the different findings from the different industries. And that then basically led us to a decision for where we should focus our attention on and what our beachhead should be. Now, very important to understand. A beachhead strategy does not exclude certain industries, right? So people are always afraid, well, if we define a beachhead, there's so many other companies that we could still sell to. Why are we limiting us only to one sector? Where the thing is, when other companies, other users, other industries approach us, which are not within our beachhead, we of course don't say no. We still sell to them because if you can sell, you sell, right? We still want to grow after all. However, it really clearly defines where should you invest your sales and marketing resources and for what kind of segment should you optimize your offering and your product for. Now, having this established, let us stand to step number 3, ensuring message market fit. So finally, now we knew, okay, what kind of industry and sector should the company mainly focus on? So we also wanted to make sure that our collateral and our messaging is really targeted towards these people and really talks about their language and their pains. Now, very often when I start working with a company, and especially when it's a technical company, I go to their website, and what I see first is an entire list of 7 different features that they're offering in the market. Well, guess what? No one freaking cares about features. No one cares about your features. They really don't. What a buyer is caring about is the benefit you are providing them and not the feature. It's very simple, but very hard to understand because so many people and companies are doing this wrong. So what we do here often with an organization to identify a good message market fit is we create a USP grid. So this is what you see here on the right-hand side. And what you do in here is you list all the benefits that are provided in the market for your target audience, your ideal customer profile. And then you list all your competitors and yourself, and you then rate your competitors and you also rate yourself. How good are you actually delivering on this benefit? And the clue is your USP is only there where you're delivering high value and no one else does. Because if you're delivering high value on this benefit, but everyone else does it as well, then it's nothing special, right? So with such an exercise, it really helps you. What is it that makes you unique? Because even if you translated your 7 features into 7 benefits are still too many. You need to focus on the 3, maximum 4 benefits that really make you unique. And this is also what you need to push in the market. Now, there might be cases where you realize, hey, there is a certain benefit which is very important to my business, but all my competition is also providing high value in that, or maybe 2 or 3 others. Well, that then really tells you directly where should you focus at with your business and with your product to further invest to take in a unique position again. So at Wingtra, we did the exactly same case, right? We did this table, we created all of that. And then out of all the technical language about their drone, there were basically 3 things that came out as the major benefits they provide. And number 1 was field efficiency. So basically, as a user, I'm way more efficient on the field using the Wingtra drone instead of doing that manually or with alternative solutions. It's consistent, high quality data, so it's very reliable. That was also important. And it's the ease of use. Security and ease of use that I only have to put the drone there and push a button, and then it flies and does everything itself. We could even analyze the feedback again from the product market fit survey and look at the specific words the users used to describe the value of the product of Wingtra. So we could use their language to actually then include it in the messaging we are writing, so we really truly speak the language of our buyers and users. As a guideline, I always say it needs to be so simple so that a dog could understand it. Now, a question I get a lot is, well, but when I now write very specific messaging for one particular industry, I'm excluding others. Yes, that's true to some extent. So messaging is also not just one version and that's it, right? When you write your messaging and you create your message market fit, imagine it to be like kind of a tree system, right? So you have a very generic messaging on your homepage because this is where most people end up. So this can be more generic, not be too industry or beachhead specific. And then you're usually going to have a gatekeeper where then you guide the people to the particular sub pages of different sub industries or buyer personas. And then there you get more specific, right? So of course, at the end, you write the messaging for all the industries and all the ICPs that are important to you, but you start with the beachhead. At Winkler, we did the exact same exercise, and going through all of this that I showed you just before, we did not do any further investment in acquisition. So without increasing ads or increasing outbound activities, but just by updating the messaging on their website, they already had a website conversion increase of 57%, which meant more than 100 leads per month that now basically flood in their funnel just because we adapted the messaging on their existing website. Good. So let's sum up. Goal 1 is now complete: establishment of a beachhead strategy. We can measure our product market fit, and we know what industries or user segments get most product market fit. We have a very specific ideal customer profile defined, and we also have message market fit created. So the foundation is there so that we now actually know who to approach and with what words and messaging should we actually approach them. And that leads us to the next milestone, which is installing the correct go-to-market strategy. Now, when we talk about go-to-market strategy, the terminology is quite open, right? What we mean with that is winning the understanding no longer of who to target, but actually how to go after them. So how does our entire acquisition engine, meaning marketing, sales, and revenue operations, need to look like and needs to be set up so that we can actually scale this unit and drive traction and produce revenue? And what most people don't understand is that there is a very clear rule on what approaches and what processes you need to implement according to the deal sizes which you are closing. So everything, again, starts with the ideal customer profile. And this is why it's so important to have a beachhead, because the ideal customer profile tells us what is the average annual contract values that we're actually closing. So if we're targeting a company with maybe 100 employees, or we're targeting a company with 1,000 employees, most likely the deal size is also different, right? And the go-to-market approach that I built looks different for deal sizes of 10K than it looks for deal sizes of 100K. And if you don't understand this, then you might build up the wrong business, the wrong go-to-market approach from the very beginning. So let you explain how that works. What you see here is a so-called go-to-market matrix. On the x-axis, again, you see the different average annual contract values. Below 10K, between 10 to 100K, and above 100K. We usually calculate in dollars here. And on the y-axis, you see now the different go-to-market approaches. And there are mainly 3 things to differentiate. Low touch, meaning product-led growth, freemium, free trial, maximum hybrid sales. Medium touch, meaning remote sales, web sales, a little bit of field sales. And high touch. So that's account-based marketing and enterprise sales. Okay? And what you see here now is a very clear guideline that there is only one field to be in per deal size where you can truly be profitable. And in reality, what happens most is this. Companies have a sales team, but they're selling deal sizes under 10K. So the effort they put into winning clients is way too big for the deal sizes they're actually closing. And that's okay if you do that if you're a small business or if you're starting out. But if you want to scale, you need to change that. Because if you scale this, it means you scale an unprofitable business from the very start. And there are only 2 ways in how you can change this. Either you start focusing on a different ICP with the same go-to-market approach, but you make sure that you get into deal sizes between 10 and 100K, or you need to change the go-to-market approach, meaning you need to go towards product-led growth to make it in a more automated way. Now imagine, and this happens a lot, startups getting a lot of money, leaders not having the experience, putting this money to work, building up their go-to-market, hiring marketing people, hiring salespeople, installing a sales process, and then suddenly everything starts stagnating because with more headcount, things become more complex, profitability basically tanks, and they're not growing further. And then we take a look at this and we realize they are in the wrong go-to-market approach. Well, I cannot just change the go-to-market approach. If I'm here and I have a marketing team and a sales team, I cannot just easily switch. It means heavy investment into building product. I eventually need to let go of my entire marketing team, because the marketers I have are experienced in this go-to-market and in these kind of channels, but not what we need here. And the sales team, I always also need to let go, because actually I should not have a sales team, or only a very limited sales team. So imagine the cost behind if you do such a mistake. So that's so important, why you need to win this awareness and understanding before you actually start growing the business. Now, the second most common mistake is this one. Being in a medium touch sales motion while they're actually closing deal sizes over 100K. And this is what we see very often, specifically to tech and hardware related businesses. So companies that are maybe spin-offs from famous universities, or other businesses that have a heavy hardware focus, where deal sizes grow very, very quickly, but then actually having very little experience in sales. And this then looks and feel like you can open a lot of conversations with a lot of businesses, but you have a very hard time closing the deals. And that's a little bit a hidden problem, because it feels like there is a lot of traction because people talk to you, but they're very bad at closing deals because the salespeople they have are too inexperienced. They don't understand how enterprise sales works. They don't understand how to manage the different buying centers and the stakeholders and navigating all the politics so that you can actually come to a signed agreement. Overall, the guiding principles for an effective go-to-market model is the following. Your lifetime value needs to be 3 times higher than your customer acquisition cost, right? That's the magic rule. So what you see here is, of course, a framework. And there are certain industries and cases where even businesses that are below 10K still make sense to have like a fairly automated sales team. If you can maintain this ratio, then it's okay, right? It's the most important part. But now you see here why everything already starts with the beachhead. Because without having a beachhead and without having your ICPs clearly defined, you cannot do this exercise, right? And another thing we then often see is, and these are the magicians among the startups that have such a widespread ICP that they find themselves selling to customers in this bucket, and sometimes even in the third bucket. What does it mean? Well, it means you would actually need to power 3 different go-to-market approaches. And it's absolutely not possible, definitely not as a startup, right? If you're a HubSpot, then that's possible because you have money and you have the resources, right? HubSpot started here, like a really good freemium free trial approach. Then they walk their way over into these deal sizes. Salesforce is doing the opposite. They're coming from this direction, and then they try also to go into this market. And now they're fighting probably for this market, right? HubSpot is still the better solution, just to mention that, but this is up to you to decide. But what I want to say is, if you're a young company, do this exercise, identify where you want to be in, and then focus on one go-to-market and do it right, because otherwise it gets really difficult. Good. Step number 2. We now know in what go-to-market approach we should be. So now we wanted to define the activities. So how are we attracting, how are we convincing, and how are we converting our people? So even when I picked the go-to-market approach I want to be in, there are, of course, still a lot of different options, right? A lot of different options in terms of channels I can use to attract the people. There are different versions on how I can convince them, and then ultimately also different aspects on how I can convert them at the end of the funnel. And also here, the recommendation is there are different activities for each of the go-to-market models. So first of all, make sure that you pick the right activities. And then second, rather choose 1 or 2 or maximum 3 activities you want to focus at, and then do them right, okay? Too many businesses then say, yeah, we have 5 different channels on how we win clients. And then when I take a closer look, I see none of them is actually performing as they should. Rather pick 2 and invest into them so that they actually work. And in the first place, pick the pick the activities that actually make sense, right? If you're selling deal sizes more than 50K, well, then paid ads is just not the right channel for you, because a decision maker of a company that is spending more than 50K for a project is most likely not the person that is going to click on ads and get convinced to start a conversation with you, right? The business just does not happen this way. So once we have the go-to-market approach, once we have the activities, then step 3 is now to derive the correct sales process and CRM operations to it. What do we mean with this? Well, a sales process in a medium touch go-to-market should only have between 4 to 5 or 6 steps. However, a sales process in an enterprise segment has more steps, right? So also here you see again how the go-to-market approach defines the sales pipeline I'm going to have. It defines the sales process I'm going to have. And it even defines what kind of salespeople am I going to hire that also have the relevant experience to power the sales pipeline and process. So what we want to do here is to install a professional sales process where we have the different pipeline stages defined, where we know exactly what should be the activities that should happen in every single pipeline stage. We know the acceptance criteria to get into the next stage. We know the exit criteria to move out into the next stage. And we also know what kind of collateral and things that should be performed in every single stage. Now, there are a lot of different things to it. What I see often is that businesses, sometimes even bigger businesses, they come to us and they don't even have basic CRM house rules installed. So for example, life cycle stages. What is a lead? What is a marketing qualified lead? What is a sales qualified lead? What is an opportunity? And what is a customer, right? There are industry standards out there that define this. HubSpot actually has one as well. So don't invent your own rules for what is a lead, what is a marketing qualified lead, what is a sales qualified lead. Follow a pattern, right? And it's a very important framework to put as a basis in place so that your marketing and sales team can also efficiently work together. And once we have that, then of course, map out the entire operations of the sales process. So these are just screenshots showing you like what are the activities happening in what kind of like life cycle stage, and then down here in what kind of like pipeline stage. And ultimately, everything then is translated into your sales pipeline, reflected in your CRM, whatever it will be. And here I just want to make another important point again. This is basically a Kanban board, right? Reflecting your sales pipeline. If I see any Kanban board with stage titles called like first meeting, second meeting, third meeting, offer sent, this has nothing to do with sales, right? Very sadly, the basic template for a sales pipeline, which you get from HubSpot, is exactly this, which could be changed, maybe, and maybe we should talk about this, but it has nothing to do with sales, right? The pipeline stages describe the psychological situation you are in with this prospect. And that usually starts with the so-called discovery stage. You are discovering the needs of your prospect and you're qualifying the prospect according to whatever framework you like, be it Band or Spiced or whatever, if this is actually a right fit for you or not. And if it's a right fit, then you go into a next stage, which could be, for example, called proof of value. So this is the stage where you must prove your value and that you can solve the pains of your prospect. And as you see here, your proof of value stage, if you do your job right, it's only one meeting. But if at the end of this call, they're not yet convinced, then there is no need to move on to deal into the evaluation stage because your job is not done. You need to further work on this deal to really prove your value. If you need 3 stakeholders to sign this deal and you only had 2 in there, your proof of value stage is not over. You're missing one of the stakeholders, right? And that really tells you how to do sales and what to pay attention on and attention for so that you can help your client to make an efficient decision and actually come to a conclusion. Good. So enough about go-to-market. Last topic, and then we wrap it up, is missing leadership. And I'm not going to dive into too much detail here, but I think it's still important to outline, because whoever does a fundraise successfully and starts hiring people, this becomes a problem quite quickly. And at the end, it's all about winning back more time for the leaders of the business by installing a proper leadership framework. And one framework I can recommend here is the so-called objectives and key results framework. So what do you do here? Basically, you take your company's targets and you split up everything into quarters. And for each quarter, you then define objectives on what should be reached by the different teams. And then you also define very clear metrics that need to be reached by these different teams. So what does happen here? First of all, by including the different teams and giving them responsibility, but also authority, you empower them to create way better results than they would do if you dictate them what to do. So basically, if I tell you, if I'm an army and a general, and I tell you, build me a bridge to get over this river, what are you going to do? Well, the soldiers are basically creating a bridge, and it takes a lot of time, but we're going to cross the river. But if I tell them, cross the river, find out how, a better solution might be that they actually find a boat nearby, and we just use this boat to get on the other side. It takes less time, and it's a way better solution. So this is your job as a leader. Don't tell them what to do. Tell them where you want to go, and let them figure out themselves how to do it, because then they get authority and responsibility, and they're way more motivated. The other thing is, by then giving them also clear KPIs they need to reach, you know that if they reach those KPIs, the business is doing well. So you're going to have a system like a traffic light system where on a weekly basis, you're going to measure those different KPIs, and the teams need to report those KPIs to you. And if it's green, you don't care. If it's yellow, you start asking questions. And if it's red, this is where your attention as a leader goes to. And this is how you can steer the organization and make sure you focus your attention really just on the things that matter most. And this is ultimately then how you get more time back and how we can scale the organization. Good. And with that, we basically solved the last of the most common mistakes we see in the go-to-market stage. Usually, then people ask, okay, once I solve that, how do we continue? What you see here is our so-called revenue growth system, which we designed at Peakora and use to work with our clients. So you see here the 6 most common challenges that businesses have when it comes to revenue growth, meaning product market fit, getting more leads, closing more deals, expanding clients, increase efficiency, and improve leadership. So what I showed you right now is basically the inner circle, building the foundations of each of them in the go-to-market stage so that you become ready to scale. And once you have those foundations, then you take a look at your business funnel and you identify, is my problem top of funnel, is it mid of funnel, or is it bottom of funnel? And then you start focusing where you have the bottleneck, which could either be, increasing more leads or expanding clients or whatever it is. So this is usually how we go after. Now, here's an overview of Wingtra. What happened after 6 months. So all those fundamentals and actually even some more we implemented over 6 months with Wingtra. I'm not going here into the details, but direct metrics we could, of course, measure just from the message market fit are the ones above, which I already have shared. I cannot give more details about revenue numbers, but basically the company continued to flourish. They hired more than 70 people. They raised a Series B of 22 million. Some of those foundations which we built with them are still exactly the same today, even though they are in Series B stage. It's just another level and another scope. And with that, I finish, and we're soon going into Q&A. Fabian, I hand it over to you. Should I continue to flip the slides for you?
Yeah, let's do that. So thanks a lot, Joel, for this great presentation. Really enjoyed it. And I see also in the chat that there lots of people really got some value out of it. Great work. And I think, as always, when it comes to startups or business, it's all about focus, right? And getting the simple things right at the very beginning. That's why this foundation set work is important. And Also, when I do workshops, I always say, hey, the ICP, that needs to be very clear because so much has to do with the ICP at the very beginning. If we don't have that set up correctly, the whole thing is not working in the long run. So, right. So really like that you pointed it out also very quick. So yeah, thanks again, Israel. Before we jump into the Q&A, I promised on a landing page in the very first slide that you guys get all a goodie bag for HubSpot Startup. So let me very quick show you how to get your hands on that before we jump into the Q&A. The HubSpot Startup program, as I mentioned at the beginning, I'm leading the DACH program over here, and it is a global program. So if you're a startup, if you're part of one of our partners, you get access to the program, and this gives you access to the educational resources that we create, playbooks, templates, guides, you name it, but also to programming event and live events and person events. We just came back from Slash last week, where we did, for instance, lots of in-person events. So you will be invited into these events if you're part of the program, as well as to these sessions like today. It was the very first step that you got all the ones that are not yet part of the program. You will get invited to these kind of sessions with Joel and with other experts that we gathered in the future. So just make sure, if you like to get invited again, if you want to get your hands on some cool stuff like also tech credits, etc. And this is the new thing that comes into for today, is that Joel also was willing to put something into the goodie bag for our HubSpot Starter members, which is a free 60-minute strategy session with Joel and his team. I think you all heard today what amazing expertise Joel and Peakora has about building a go-to-market strategy. So have a look into it. Apply for a free session. Joel will have a look if you are actually able to support your startup, and then you will get this session on. Just make sure follow this link. You will also have it in the inbox in a second. So you can apply for the startup program, and you get access to also HubSpot discounts, LinkedIn, Google Ad credits, Apollo discounts. So we have actually put the most important tools we believe in a startup journey in one bundle, and you will get access to that and on top the strategy session.